All right, good afternoon, everyone, and welcome to Network 2020's discussion about a U.S. sovereign wealth fund. My name is Courtney Doggart, and I'm the president of Network 2020. We are a New York City-based nonprofit that provides a platform for nuanced discussions about global affairs. We bring leading thinkers and doers in the international affairs space to our audiences who are both in person in New York as well as online around the world, and all of whom are leaders in their own right and really strive to be informed citizens. So thank you for joining us and listening. It is a pleasure to welcome today three terrific panelists. Firstly, we have Courtney Fingar. She is a journalist, a commentator, and a consultant who is focused on foreign direct investment, and she has spent 15 years with the Financial Times and traveled to more than 80 countries on assignment. We are also pleased to welcome the Honorable Sarah Sewall, who is In-Q-Tel's Executive Vice President for Policy. She previously served as the Undersecretary of State for Civilian Security, Democracy, and Human Rights, and served on the Defense Policy Board under Secretaries Gates and Hagel, and she was a Rhodes Scholar at Oxford University. Lastly, we are very pleased to welcome Ted Truman. He is a senior fellow at the Mossavar-Rahmani Center for Business and Government at Harvard's Kennedy School. He served as Assistant Secretary of the U.S. Treasury for International Affairs and directed the Division of International Finance of the Board of Governors of the Federal Reserve. He is the author or editor of several books, including Sovereign Wealth Funds, Threat or Salvation. So welcome to each of you. Thank you. Ted, I'd like to start with you since you have literally written the book on sovereign wealth funds. And just to lead us off, a little bit of ground setting. What is a sovereign wealth fund? How do most countries use them? And why has the U.S. never had one?
So let's start with what is a sovereign wealth fund? Terminology in this area is pretty mixed up, if I may put it that way. It is a type of strategic investment fund. The term was coined by Andrew Rosenoff in 2005, and I've helped to popularize it along with other people. And the classic sovereign wealth fund that we're talking about was funded by excess revenue from exploiting natural resources. In effect, you dig the wealth out from under the ground and you sell it, and you invest part of the proceeds in above ground for future generations. And those investments in the classic case were largely offshore because for economic reasons, you didn't want to have, if you spend it all at home, it would effectively blow up the economy, too much demand at one point in time. So a lot of it was invested offshore, and that in the early decade of this century led to concerns that host countries in these funds, their investments, you'd find some political interference, and that led to the creation of the Santiago Principles and a group now called the International Forum for Sovereign Wealth Funds to monitor all that. But they're not all sovereign wealth funds are of this sort of classic variety. There are all kinds of different kinds of funds. There are stabilization funds, but budget stabilization funds, where they spend the money when the budget is falling short of revenues. That's done in Chile and Mexico. They're holding companies, in effect. Temasek is an example. It doesn't consider itself a sovereign wealth fund, but people consider it a sovereign wealth fund. Sometimes there are pension funds that are or augmented pension funds, as in New Zealand and Australia, technically. And then some funds are created out of foreign exchange reserves. And then finally, there are some development funds which collect funds from various agencies for development. So they're all different kinds. I used to say what happened was that people who managed these funds woke up one morning and discovered they were members of a club to which they never had applied, and were sort of caught up in the concerns about sovereign wealth funds or the drama of sovereign wealth funds, and there are various purposes that countries use these for. So why has the United States not had a sovereign wealth fund? Something on my screen, I can't, distracting me. Essentially, we have no excess reserves to fund it. The United States does hold many diverse sets of funds, real and financial, each with its own history. You might consider the Tennessee Valley Authority as a sovereign wealth fund or kind of sovereign wealth fund investment. Social Security is a sovereign wealth fund in some sense, except it only invests in U.S. securities. And many states have sovereign wealth funds. Some disagreement about how many. ChatGPT says 22. My reviews of sovereign wealth funds say I've reviewed 7 states funds, and the Wikipedia says there are 11 of them. The best known in the United States is the Alaska Fund. And so they've been around and they're used. In some sense, they're very similar to pension funds. And in fact, if you want to think about how they're managed, pension funds, there's a nice comparison group, and I've used that in thinking about sovereign wealth funds.
Thank you. So kind of moving forward to today, Sarah, Trump's executive order calls for creating a U.S. sovereign wealth fund to promote great national endeavors. What exactly is being proposed, and what does the administration believe has changed to make this endeavor viable or necessary right now?
Well, it's a great question, and a lot of people in Washington are opining about it. The administration has said a number of things. I mean, the president has spoken prior to making this executive order when he was on the campaign trail. He talked about a sovereign wealth fund and seemed to be focused on it as a revenue generation tool to try to essentially facilitate the lowering of taxes, but continue to fund important programs. The executive order in its language hints at sort of normative or concrete goals in addition to making money. And the examples that he gave ranged from defense to bringing manufacturing home, things that have been important goals of the Trump administration. I think it's fair to say that the current sort of scuttlebutt within the Washington ecosystem is that the details are in draft form and that they will be negotiated with Congress. And because Trump is so eager to think of tariffs as funding a sovereign wealth fund, to Ted's point about, typically you want an excess source of revenue that's requiring you to then invest it. I think you're going to see a lot of committees that might have very strong views entering into the mix, banking and commerce. And I think there will be a robust discussion. I think the big question for the nation is, how does it think about the overarching purpose? Because, Ted talked about the ecumenical nature of what people refer to as a sovereign wealth fund. There are a lot of sovereign wealth funds that have truly normative goals, such as diversity and inclusion, or economic development in specific geographies. And so you can think about essentially the big tension that will need to be worked out is, are we going for ROI in a sovereign wealth fund and thinking about it primarily as a source of revenue? Or are we pursuing other national goals for which equity investing in particular is a useful tool?
Okay, great. Thank you. And that kind of takes us to the investment piece with you, Courtney. And I think we'd be interested to just understand if the US were to establish a sovereign wealth fund, what would be the implications for investment broadly, whether it's foreign direct investment or otherwise? And how do you think that would impact, what's happening within markets more broadly?
Well, if we look first from a global perspective, we have seen sovereign wealth fund investment and other similar families of investment blurring the lines a bit more with what we used to consider traditional FDI. And also the FDI agencies, investment promotion agencies who try to attract inward investment, used to just be considered with greenfield FDI. So that typical, what we would call the real FDI, companies setting up, putting physical facilities and investing somewhere. And they were less concerned with financial types of investment, institutional investment, and this bucket of investors. But what we've seen in recent years is, on the one hand, sovereign wealth funds have become more interested in FDI type projects, but also these entities, investment promotion agencies, are trying to engage much more with sovereign wealth funds. And so sovereign wealth fund investment is playing now a more prominent role in the world of FDI, whereas we used to treat these things somewhat separately. And there's some reasons for that. One is the focus on sustainable investment and sustainable development goals. Sovereign wealth funds give a nice kind of vehicle for that type of investment. And a lot of those funds have that mandate or interest. Likewise, governments need that type of investment to fulfill sustainable development and national development goals. So there's a kind of synergy there. Also, the long-term investment horizons that sovereign wealth funds have actually align well with FDI goals, who also tend to take a longer view. And also, we're seeing more co-investment and partnership models rising, where you'll see co-investment with development banks, governments, private equity, blending capital to kind of de-risk large projects like in infrastructure, real estate, energy, and so on. So I actually think there is a lot of benefit to be found with sovereign wealth investment kind of getting much more into the slipstream of broader FDI. Now, the US, as a traditional FDI, if we think in terms of typical FDI, the US is both the largest destination of FDI and the largest generator of outbound FDI. So any move by the US has ripple effects in the world of FDI. To the extent that a US sovereign wealth fund, if able to be put into practice in the way that other sovereign wealth funds are, could provide a useful vehicle for channeling some domestic investment in necessary areas like infrastructure, which is a major weakness that the US has as an economy and as an investment destination, but also channeling US investment into strategic projects overseas. And we now see a real gap there with basically the defunding of US aid programs. And one thing I wonder, and this is maybe just an entirely different, broader conversation, is would a sovereign wealth fund fill that gap that will now exist in terms of the US ability to channel capital overseas in developing countries strategically, and the soft power benefits that brings?
That's great. Thank you. And actually, it brings up a couple of questions. Ted, before I go to you with my next question, I actually had a follow-up, I guess, to what we've been talking about earlier, which is 2 points. One, we didn't talk about size and scope of FDI, or not FDI, sorry, of sovereign wealth funds, and how that has changed over the years, because of, if I understand correctly, I believe it's increased, or the number of sovereign wealth funds have increased quite dramatically. And two, if sovereign wealth funds are used in the way that Courtney just described as sort of this new vehicle for investment overseas, how does that compare with other vehicles that are already there, like the Development Finance Corporation or things like that? What's the differentiator?
Well, in terms of just funds, although they're, depending how you count them, we're either in the hundreds of sovereign wealth funds, or things that are sort of classified as sovereign wealth funds, as I explained. There are many different types, but they're really dominated by about 10 funds, right? There are less than 10 funds there are only 10 funds that have more than $500 billion, and there are about 5 funds that have more than $1 trillion. I mean, those are big funds, but they're not, I defer to the experts. They're not huge. And so they're important players at the moment, but they're not dominant players. And but as the other Courtney said, they often these days invest alongside other activities, and many funds have invested in large scale in the United States. They came to the rescue of several U.S. financial institutions and didn't do so well, at least in the short run. But that they could do anything. I'm not sure I exactly answered your question, but trying to provide some context, I guess.
We can always check with Chat GPT to see, what the real answer is. But yes. Any thoughts on what the differentiator would be between, say, a sovereign wealth fund that invests abroad almost in a USAID like fashion versus development?
I mean, in some sense, because it covers the terminology is so loose, if I may put it that way. You could find the funds that essentially mimic the what is it, the development, what do you call it? They replaced AID, ran projects, invested alongside projects. It would be a different type of structure. And presumably, this would be longer-term investment projects rather than current expenditure types projects. But that would be certainly one. I try to remember. My colleagues will probably tell you the name of our development entity that does that. I can't remember what it was created about 20 years ago. Anyhow, CDC, something like that. Anyhow, showing my age. But they could do. I mean, I think you could imagine anything. But a big piece of choice is you have a sovereign wealth fund? Is it going to be investing at home or abroad or both? As I said, the sort of classic sovereign wealth funds invested abroad because they principally abroad, partly because they're not, if they invested at home, they would blow up the economy in effect. Some of those funds have brought money back, bring money back into the domestic economy, which makes some sense. And there's some funds that invest primarily at home. I mean, one of the bigger funds is the CIC, the Chinese Investment Corporation. It's very large, but 90% of its investments are at home. It's basically a financial holding company, domestic financial holding company, and has investments abroad, but that's not the major outlet for it.
So I think you just alluded to some of the risks with if a sovereign wealth fund invests primarily at home, it could, theoretically blow up the economy. What are some of the other potential risks or challenges that might come, in particular, with the creation of a U.S. sovereign wealth fund?
Well, I mean, the big. I suspect that, although we may differ on whether your panel may differ on whether we need one or should have one, I think probably we would agree that if you want to have one, you should have very clear guidelines, and so in my opinion, the transparency and accountability are very important, because the risk is that you will end up being used for. You want to set something up that operates at arm's length from the political process, and inspires confidence in the citizens who they may not think about it that way, who essentially own the fund, right? So the government is acting for the citizens and investing in these investments, and they so they want to know what's going on with their money, and so that so clear set of guidelines. Independent managers on the one hand, operating under clear guidelines in terms of what the types of investment they should be doing and this sort of thing. So it was a board of directors and then thinking about it that way. And regular reports on what they're doing, including when they're if they're really in the financial area, not so much the direct investment area, in the financial area, how they manage their funds to avoid disrupting financial markets if they're of some scale. So it's so there is a concern about how they do their business, and important, I think, to have a structure that inspires confidence.
All right, great. Thank you. Sarah, turning to you, and Courtney, I'll follow up with a similar question, but how could a U.S. sovereign wealth fund support national priorities like technology and infrastructure?
Well, I'm happy to talk about the ways in which I think there are unique capital opportunities for supporting technology, but I do want to build on something that the other Courtney was saying earlier, which is, if you think about, and Ted as well, if you think about foreign assistance, so much of foreign assistance was humanitarian assistance with no pretense of return. And even where the U.S. had, in the name of international development, invested in large-scale infrastructure, whether it was, LPG or whether it was, broadband or whatever, there was not a goal of compensation. In fact, one of the things that DFC chafes against is the degree to which it's got both scoring issues in terms of how it's budgeted when it makes investment, but it's also got requirements for solvency that then can make it difficult to do what it's supposed to do by mission. And so this is all by way of saying that it's very important when we talk about a sovereign wealth fund to be explicit about the kind of purposes for which a sovereign wealth fund would be used, because the variety is simply so enormous that the word becomes almost meaningless depending on how it's defined. And unfortunately for this conversation, we just don't know yet what an American sovereign wealth fund could look like. One of the things that I've observed is the degree to which, as the U.S. thinks about great power competition and how to sustain the strength of the U.S. economy, not to mention our military power, technology plays such an important role. And at the same time, over the last many decades, we really shifted from a government-led technology trajectory for the country to a technology trajectory that is led by the private sector. It is private investors and corporations that are investing their money to bring the research and development into products and building companies. When you have the market defining your technology trajectory as a nation, you're going to get some great outcomes, but you're also going to have outcomes that diverge significantly from what a net assessment of where the U.S. is versus its competitors are, or a view about which technologies are going to be most revolutionary and do we need to lead on. And you're going to have gaps in those technologies because the market's not solving for them. One of the key opportunities that I think exists were the U.S. to think about any piece of a sovereign wealth fund, because it probably wouldn't be directly in line with all of the different goals that the Trump administration has evinced at different points in time, is to think about how to find those key gaps, how to identify those gaps, and how to use catalytic government money invested in the form of equity that both gets a return on its investment, but also signals to other private investors that this is an important area that is likely to be backed by the government over the longer haul. So you could find a form of public-private partnership through a sovereign wealth fund in a catalytic form to make sure that the U.S. does retain tech supremacy in the areas that are most important. It's a problem that exists in the market and would be addressed through investment. And so that's why I think there's a huge opportunity as we debate what could be the purposes. Everybody's going to have an idea of what we could spend money on. So I do think this primary divide is, are we simply trying to maximize returns, or are we trying to achieve other objectives? And if so, which? lots of debate there, but I think a modest amount of US capital wisely targeted against those gaps in the market development of technologies that matter most could be essentially the saving grace for this next century of great power competition, in which the way we've changed how technology develops potentially puts us at a disadvantage unless we compensate for that, and a sovereign wealth fund could help.
So is it safe to say that if you were advising the president's team on a sovereign wealth fund strategy, you would say this should be narrowly defined. It should look at sort of what's happening in the area of geopolitical competition, and technology is a driving factor in that? Does that
Yes,
seem
and I
like
agree with Ted's point earlier that you have to have it run at an arm's length. I mean, we've seen massive corruption, like unbelievable corruption in some countries. And the tendency for politicization of goals and for the slippery slope of, well, this could be a good investment, but it's my buddies, and so we're going to bump it up. Like, that is a natural problem in any kind of dispersal of government funding, but in particular, investing decisions, which even when transparent, sometimes lack a particular the ability to quantify every aspect of those decisions and therefore remain to some degree subjective. So I think I would argue that we should do that. I would not argue that an entire sovereign wealth fund of the levels that we've been talking about, the Big 10, which is, I think, what is in President Trump's head, I wouldn't argue that that would be overkill. But I would argue that one stream should be for that. And then, of course, because I would want my idea to be adopted, I would say, and it can coexist with all of your other goals within a sovereign wealth fund.
Thank you. And Courtney, similar question to you, but looking at it through the investment lens and the lens of foreign direct investment. How do you see a U.S. sovereign wealth fund kind of, entering into those kinds of investments with national priorities like technology and infrastructure? And, how does that play within the broader investment field?
Well, I think the same principles in theory would apply to the extent that this fund would have much focus on investing overseas, which is mentioned. We don't really know. Ted mentioned, and it has to be clear principles. There has to be a clear mandate. And Sarah's right as well that, for example, when it comes to overseas development, this would not be a direct swap for something like USAID, which was focused on, capacity building, technical assistance, and then also kind of stepping into de-risk projects. This would clearly just be a more direct investment approach. But similarly to the ethos of USAID, and where there could be a gap, is in that influence of the U.S. overseas and matching these direct investments from a strategic perspective with U.S. goals, foreign policy goals, and with strategic global competition in mind, meaning investing in a targeted way in infrastructure, but technology in allied countries or in strategic places with strategic partners that help advance U.S. foreign policy goals. But that also with that need for returns in mind, which is a bit of a delicate balancing act. And that's where I see the kind of gap of a collapse of USAID is as a tool for the US in a way shaping the world as it would like it to be and having that influence. Again, the question, I think infrastructure to me, I keep coming back to as key, because not only is it a major problem in the United States, so there could be a role for the fund in helping address that, but to the extent that infrastructure globally affects supply chains and therefore the efficiency of trade, and that impacts U.S. companies severely, targeted investments in strategic infrastructure projects internationally could also align with those kind of strategic goals.
All right, great, thank you. And a question for all of you, and I'll start with you, Courtney, and then work our way back. You've been mentioning a lot about these strategic goals. Are there lessons that we can draw from countries that have successfully aligned their sovereign wealth funds with long-term strategic goals? Is there anything that comes to mind for you?
Well, I think there are, in some, you see the successful zone or successful funds like you see in Singapore, which has given it great influence and power and clout, and also has been aligned with not just strong financial returns, but what helps Singapore in its neighborhood and beyond. But then you have the typical funds in the Gulf, for which it is that exercise of power and influence and ally building, and just the simple desire of countries to then court those funds. And I think if you look in a more power seeking perspective, the funds of the Gulf have helped those countries in their influence overseas, because again, it gives a targeted mechanisms. They're not just countries, oh, they have oil and we need to trade with them and we want a piece of that pie, but these are actual vehicles for extending and investing in other countries that everyone wants, and it's giving them some kind of influence. So I think there are a few examples like that where if the funds are successful, they can be sort of these hard tools for advancing national strategic interests, but they can also be tools for actually generating strong returns. Again, if you look at the more successful ones like Norway, Singapore, and elsewhere.
Thank you. Sarah, thoughts, and just for those who are listening, we'll turn to audience Q&A soon. So if you have any questions, please put them in the Q&A box. Yes, Sarah, any lessons that we can draw from countries that have successfully aligned?
I agree with the other Courtney completely. I think it's been fascinating to watch some of the early funds, which were, you know, the commodity profit based, invested for a return, morph over time to become more sort of savvy politicized tools. That happens primarily in some of the Gulf states, I would argue not Norway. And again, the degree of transparency and the degree of accountability that accompanies those varies enormously by country too. I think whenever you see a sovereign wealth fund, you know, making essentially vanity investments, you can see that it has become exactly what Courtney described, which is really, you know, a tool of soft power. And it's less about the goals of the fund itself vis-a-vis the specific investments. And so I would argue that those are, by one measure, less effective if given the original goals, but clearly the goals morph. And so again, it comes back to so much, what is the expectation of that fund? And how can a population have a voice in making sure that wealth deployed on its behalf is in fact representing either the values or the interests of the citizenry?
Great, thank you. Ted, anything you would want to add on that?
Trying to turn off my telephone. Actually, one of the challenges of research in this area, at least, and I'm not as up to date as the other two panelists, is that the funds, not all the funds tell you a lot about how well they're doing, if you want to put it that way. And then even in the Santiago Principles, they basically say it would be a good idea, but that was not one of the things that was put down as one of the requirements. And so it was a little fuss. If you're looking at returns alone, it's a little hard to figure out exact financial returns narrowly, how successful they've been not. Though, I mean, Norway is is the biggest fund. It so happens it scores 100% on my little scoreboard. It didn't always, by the way, but it cleaned up its act a little bit around the edges. But it has a big strategy. It doesn't invest. It's very diversified. It exercises its. It does exercise its equity voting power. So it uses its influence in that way, in a sort of classic investment standpoint, and that is largely shaped by the attitudes of the Norwegian citizens. They have an elaborate structure in order to do that, and it's one of the reasons why it has done so well. But it's a special case in many respects, precisely because it has been so successful, largely because they've been pumping so much it can lead the pack in which other countries. Another example on the other side is Russia. Russia has one of these things as well, but essentially has largely drawn it all down in the context of the war in Ukraine. Which doesn't mean, by the way, in my view, it doesn't mean you shouldn't do that, right? It's an investment fund, and you can change what you want to do with it as long as it's done in a reasonably transparent way. So you may have set it up originally as a pension fund, and then you use it to help rescue your banks. This is basically what the Irish fund was converted from one to the other in terms of it, which is still is pursuing national goals, but the changes, it should be all rock and concrete.
Concrete seems to be the word of the day here. I'm switching to the Q&A box. And again, if you're listening and if you have any questions, please feel free to type them in the Q&A box. We have a couple of astute listeners who have jumped onto the fact that we've talked a lot about what we would do with the money, how we would spend it, which makes me think of the old SNL sketch of the Greek economy where they're like, we've got the spending down, but what about the savings? So two questions, and I guess maybe I'll start with you, Sarah, here. Given that the US lacks the budget surpluses that typically fund sovereign wealth funds, what financing mechanisms might be viable for establishing such a fund without exacerbating the national debt? And we have someone else who points out the twin sovereign and trade deficit. So what would be the source of funding?
There's the rub. Yes, indeed. It is part of the reason why we have not had this on the table as a serious, U.S. option. It's been a long time since we had surpluses to play with. And so I think for the Trump administration, the hope is that tariffs become a major source of revenues for a sovereign wealth fund. And obviously that is TBD, and there's a lot of uncertainty around that. But I think the interesting thing, if you look at how other states, the very first sovereign wealth fund in my mind was in 1803 when Ohio was given a land grant and it sold its land and used the money as a way to invest for education for the state. So even in our own history, we had commodities that were the source of that revenue. So I do think that it is in many ways the Achilles heel. It's also true that if you have tariffs coming in, that's revenue coming in, and then you have a Congress that, while it has been more obescent of late, nonetheless will want to have a view on how to set priorities for the fund and how it's spent. If it's a de facto form of federal spending, Congress will want to have a voice. And so I do think there are real questions about how feasible it is. Some states, you look at the UK, they just set up a $10 billion fund. Maybe someone on the panel knows how they financed it, but you can do it at a certain scale, and you can enter into a form of debt pending revenue. But for the United States to do that based on hopes of tariff revenue seems tenuous, and probably should scope the ambitions of any sovereign wealth fund discussion until such time as the revenues actually come in.
Ted, is there anything you want to add to that? And alongside that, I do have, someone who wrote in wondering if the intention may be to sell off public lands as well to create the sovereign wealth fund. So do you have any commenting on the funding structure, whether it's tariffs, sales of public land, or otherwise?
I think you can, some of the discussion of sovereign wealth, a U.S. sovereign wealth fund, have emphasized the fact that the U.S. government owns a wide range of assets, right? And you could think of the sovereign wealth fund as consolidating that ownership on the one hand, and as managing those assets, including selling off those assets, land, for example, and you could even there are a lot of streams. There's a number of streams of revenues, not all very big, as Sarah was saying, that could be devoted in this direction. So I think you could do, if you wanted to do this, you could fund it through a variety of different means, and you could even think about putting some of those assets and selling some of those assets and to generate funds that be used for if you want to put it that way, a broader, I want to say social, but that's going to sound bad, but broader national purpose. And that would be one way to transform some assets, one type of assets, say land, which would be controversial, of course, but land into cash that could be used for other national purposes.
Great, thanks. Courtney, we have a question about what could be the role of cryptocurrencies in a possible sovereign wealth fund.
Oh, that's a really good question. And I will throw out a caveat that I'm not a crypto gal. And I think that probably to have a really insightful answer requires more knowledge than I have of crypto. But I'm sure it's going to have a role, and it's clear that the Trump administration is very into crypto. And to the extent that it can help move international money around, it is being used to channel money in and out, for example, of developing countries where there are weird currency controls and there's difficulty getting money in and out. I know that crypto has become a tool for that, but I don't want to step out of my lane and profess some knowledge of crypto structures that I just simply don't have.
I appreciate that candor. So, Sarah, as a former government official, this person writes, how would you try to convince the Trump administration of the importance of including foreign aid programs as part of a sovereign wealth fund's portfolio?
I think there is a very compelling case that has fallen on deaf ears to date about the importance of humanitarian assistance and foreign assistance in American soft power. I don't know that a sovereign wealth fund is the right substitute for those goals for several reasons. One, I think they're just at odds with pretty much any sovereign wealth fund mandate that I'm aware of. Two, I think you undercut your soft power for doing good things to advance the interests of others and America's. If it's a sovereign wealth fund, it's clearly most about America. So you've sort of taken away the veil, if you will, of empathy and concern. And I don't know that that you would ever be able to marry the cultures of foreign assistance with the investing acumen of a sovereign wealth fund. So I think I would not take that argument on. I think that's more freight than a sovereign wealth fund could bear.
Thank you. Courtney, we have someone who asks, which sectors or projects would you see as quick wins for a U.S. sovereign wealth fund? And they're particularly interested in boosting domestic infrastructure, but also curious to hear what you would think more broadly.
And that's a really, I think, a good question, which I've put some thought into in the past. And I think if you were looking at quick wins, so there's what's needed and then what could actually be delivered and make an impact in a reasonable timeline. And those would be areas or projects where, for example, there may be local or region specific, a bit modular, and the planning and the permissions are already in place, but is also needed. So a couple areas would be, obviously, we just think of traditional transportation infrastructure, which is really aging and problematic in the US. So roads, bridges, transit systems. To the extent that there are projects in those areas, I mean, the needs are vast. So you'd have to think very carefully about where this could be mobilized. But where there are projects where the environmental reviews have already taken place, maybe there's already planning permission, and therefore ground could in theory be broken, but there's a problem with financing and capital mobilization, that would be a great use of that, but which require a lot of study and a prioritization of those. Electric grid modernization, another major need in the US. And again, this falls in the category of these upgrades can be kind of modular and region or local specific. So that might be a way to kind of channel some investment quite productively. And then in terms of digital infrastructure, which of course is a key part of the category of infrastructure. And if you think of the problems with access to broadband and digital infrastructure in rural areas, which, you know, you can link to priorities around economic development, education, even access to healthcare, leaving aside digital inclusion, this could be a major priority. And it links to, you know, Sarah talked about the importance of tech, but this is more kind of hardcore digital infrastructure on a national level. And broadband projects would be a good use in this, looking for quick wins, because a broadband project can, in theory, be completed in something like 1 to 3 years if you have the right permits. So there are a lot of other areas around water and sanitation and so on. But if I were to pick kind of 3 priority areas and think about the criteria, it would be that.
If I could, Courtney, our host, build a little bit on Courtney, the panelist's comment, which is I think there's a bridge that maybe connects the two and comes from both the technology goals, but also serves the infrastructure goals. And that is supply chain security. I think we've got just, you know, huge problems in this geopolitical moment as we think about our ability to manufacture, period. Manufacture using advanced technology, manufacture using biotechnology, critical mineral supply, the ability to recycle electronic waste and to use less environmentally harmful ways to extract rare earths from existing mining waste. I mean, there's a really nice intersection there, I think, between investing in the core infrastructure of America and securing America through advanced technologies that can play both roles. And so I would love to see, you know, a more expansive view to include supply chain security, because it's just become so much an emphasis in the policy community, but we don't have the financing to support it done right. You can do more dirty mining, but wouldn't you rather do it with advanced technologies that make it safer and cleaner and ultimately create a circular economy where you've really got America first at the heart of it? So I think there's a great opportunity there.
I agree with you very strongly on that. That's a really great point.
Excellent. Oh, Ted, yes.
I think you need to, I mean, one challenge it seems to be in this area is using a sovereign wealth fund to meet needs or fill holes, if you want to put it that way, both potholes and metaphorical holes, and generating financial returns, right? And that then they come together in the fact that the challenges that you that a sovereign U.S. sovereign wealth funds, you know, is going to have some bad investments and some good investments. Many years ago, I got a telephone call from Alaska, and they said the Alaska Permanent Fund, whatever its name is, I can never remember, right, just lost money. I said, well, everybody's losing money. This was in 2009. Everybody's losing money, and that's a very well-run fund, at least according to my scoreboard. It scored very highly on the scoreboard. And so the problem of, as I'm sure that Courtney probably, the panelist Courtney probably will say, I mean, you're going to have some losers, and losers are very unpopular politically, right? And that's why you need a structure that, in some sense, acknowledges that from the beginning, and then you have to decide whether you're going to sort of err on the side of maximizing returns, right, in a financial dimension, or maximizing returns in a social, broader social dimension, there's obviously a case for both, but the two together is a little complicated.
Right, great, thank you. Sarah, we have a question here, and Ted, you might want to chime in on this one too. How would you ensure bipartisan installation of a sovereign wealth fund's investment strategy, particularly in a polarized climate?
Yeah, it's a great question. And I think one of the benefits of Congress being involved in a discussion with the executive branch is that I think those issues are more likely to be raised. You know, different countries have handled the execution of their sovereign wealth funds differently. Some embed it sort of right within a government agency. Others have quasi-independent agent entities or independent entities. You know, when I think, you know, I work for In-Q-Tel. It's an independent 501c3, but it works at the behest of the government. And that model to me seems almost ideal for how you could best insulate. You have strategic guidance coming in the form of the goals, you know, getting back to the very beginning when Ted was saying you have to be very clear about your goals, you create your metrics for evaluating it, you have your fund being executed independently, making those decisions vis-a-vis the goal and being evaluated by the metrics, and it's transparent. I think that if you can achieve consensus on the need for it, the debate then becomes about who's in that entity, who runs that entity, how do you populate that entity so that you have bipartisan, if you will, representation within it, or purely technocratic representation in it, if such a thing is even possible in today's world. But I think that's my instinct would be to take it as to make it as transparent as possible and as far removed from government day to day as possible in order to facilitate that kind of accountability, again, to taxpayers and citizens.
Yeah, which raises an interesting question of how you do that in an age when even some bipartisan entities that are arm's length seem to have shifting leadership structures at the top too. So, Ted, anything you want to say
I'm going
about
to say
that?
the first, add to this. So the first step, we're not there yet. The first step would be for the administration, in fact, to involve Congress, right, in creating a structure. Not clear that administration will do that, but that would be the first step to do this. So to involve Congress. I mean, I don't know enough about that. I wouldn't be surprised if they couldn't set up a sovereign wealth fund without involving Congress, and that probably would be a mistake in any long-term sense, because that means, you know, one administration has type A sovereign wealth and the next administration has type B sovereign wealth fund, and you have chaos. I mean, you have at worst chaos and or something short of that. So involving Congress and therefore embedding it in a structure would be, I think, necessary for long run success.
Thank you. Yeah, that's a great point about Congress. Courtney, we have a question here. Someone writes they are a newly established family office, and they're curious of your thoughts on how they can align themselves with the long-term innovation mandates of a U.S. sovereign wealth fund.
Well, again, you can look to some examples again from the Gulf, where a lot of the major family offices, like the sovereign wealth funds, tend to align a lot of their investment principles with strategic national priorities. They operate quite a bit in step. Now, a lot of that is to do with the structures and how the major families are entwined with the ruling families or part of those. So it doesn't work quite the same, for example, in the US, but you also see it in Europe, where a lot of the major European family offices also kind of get on board, as it were, at least with some of the principles around responsible investing, sustainability, climate goals of their host countries and countries of origin. So there's no reason why family offices in the US could not at least adopt a similar approach, and they can be also co-invest in projects with sovereign wealth fund and other entities, which we do see in other places in the world, especially with some of the more substantial family offices. But it's again more around understanding what those priorities may be, which, as we've all talked about and heard today, we don't really know what those are, and how that will sit against the need for returns and to what extent national strategic goals will come into it. But we do see cases, again, of family offices kind of aligning themselves and actually kind of getting on board, not only with the projects themselves, but what those strategic priorities are.
Thank you for that. We have a question here on the funding piece. So this person wants to know, and I'll ask you, Ted, first, and then maybe Sarah, you might want to chime in. Could we invite citizens to invest directly, either matched or not, in a sovereign wealth fund via their 401ks? Has something like that ever been done?
I'm not sure, but I think there's no reason why I mean, neither is why it can't be done. There are some sovereign wealth funds who actually do float debt. And that's another question that you want when setting one up, right? Can the sovereign wealth fund itself float debt? Now, we actually have several entities within the United States already that float debt, though they actually do it through the whatever it's called, bank, or through the Treasury Department. But you could imagine that raising funds, raising funds through floating of debt by the average citizen. The Treasury might not like that because the left hand is competing a bit with the right hand. Though a little bit of competition is probably not all bad. So I think you could have a system in which you have citizens essentially diverting their investment from the stock market or other vehicles into a sovereign wealth fund. And I'm not sure how it would be successful, but it's probably not worth a try.
Let's see. We have a question here, and Ted, maybe again, I'll start with you on this one, because the questioner writes that you said that sovereign wealth funds are similar to pension funds, and Canada has the best national pension fund performance with a long-term return of more than 9%, versus our Social Security, which is more about 3%, since it's only invested in U.S. Treasuries. Isn't it time to open these U.S.-based funds to global market investments?
I'm tempted to say that one's above my pay grade. I mean, yes, the pension funds in general have an interesting thing. When I did this research and used pension funds as a sort of model, pension funds also range in terms of their success and failure and how well how transparent they are, and so forth and so on, accountable they are, and many of the same questions arise. So you could imagine the Social Security has been proposed, as I'm sure everybody knows, has been proposed that they should, to some extent, privatize the Social Security fund. It would have a lot of implications for debt management, for example, and I'm not sure that the Secretary of the Treasury would want to go there as to being in charge of debt management on the side. But there's nothing in principle why you couldn't do that. The question is whether you should.
So one final question for each of you, and I'll start, I guess, with you, Sarah. What is it you would most want to see in order to kind of indicate that if this sovereign wealth fund comes to a fruition, that it's heading in the right direction? Like what would be kind of an indicator for you that this could move forward and could move forward positively? So you're muted.
Sorry about that. Clarity of purpose, nothing we haven't said before, all right? So clarity of purpose, independence of operation, and transparency and accountability.
Courtney?
Yes, I agree with all that. And again, communicating exactly all of these things. What are these priorities written out very clearly? What can we expect? What would be the approach? What would be the sort of investment philosophy, as it were, of such a fund? Without that strategic direction, it would be very hard to see what the actual utility of it would be.
Ted?
I was going to say at the beginning that I expected to be the Black Fairy at this party. But I basically do agree with Courtney and Sarah that, if you're going to do it the right way, and doing it the right way would be but one of my tests about whether you should do it at all.
Do it right or don't do it at all. Well, thank you to the three of you. I appreciate all the insights. Who knows whether or not we will actually get there? It sounds like it is both a tremendous opportunity if done right, and also could be a tremendously a bad opportunity if done incorrectly. So let's hope it's the former. Thank you everyone for joining. We do have an event tonight that is in New York for members only. So we'll be talking with Scott Sarlin on risk in national security and in the private sector. We will be taking a short hiatus as Network 2020 is taking a group to Vietnam, and we will come back in June. We have a discussion again for members only on oil to innovation, looking at the Gulf. And we will be adding some more events as we conclude this trip to Vietnam. But I just want to say thank you all. We look forward to seeing people either in New York tonight or in June online, and hopefully soon. So thank you to the three of you, and appreciate everyone for being here. Bye.
Thank you.